Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, April 8th, 2010. This morning we're talking about the Greek tragedy, Act 2. Some might say this is a Greek comedy, although if you live in the Eurozone, you may not think either of these should apply. Anyway, what's happened recently is that credit spreads have widened to the highest levels that they've had since the inception of the euro, as there's been skepticism over Greece's ability to balance its budget and to be able to shrink its deficit. Therefore, it's causing its borrowing costs to skyrocket, which is now making some of these Greek plans possibly untenable. So we're going to have to see what happens with that. But, you know, this is a familiar story. This isn't anything new. Whoops, problems in Greece. Okay. In the meantime, the ECB, they predictably left interest rates unchanged at 1%. And that also happened yesterday. We were talking about yesterday's stagnating GDP report, so this is no surprise either. Later today, ECB President Jean-Claude Trichet is due to speak, and if he addresses this Greek situation, it may help the euro turn around. Now in the UK, the Bank of England left both its asset purchase plan and interest rates in place, so there's no change there. They're still, working through economic recovery and concerned about the double-dip recession. So in any event, this all adds up to risk aversion, and predictably the currency pairs are performing as would be expected. So let's take a quick look here. First thing we want to look at is the euro versus USD. We're checking it out on the 4-hour chart. As you can see here, it's been a nice slow little downtrend here as a result of the renewed Greek fears. So we had Greek problems coming down here, then we had the fix. Okay, here's the bailout coming up, and now it's not so good. So you can see how these trends work in the short term for different pairs. This Euro USD trend is one of them that has been pretty prevalent as of late. We'll also just take a quick look at Aussie USD. Let's look at this on the 5 real quick. They actually reported that their unemployment rate came out, stayed the same, but they added jobs. That's a good sign. They have roughly half the unemployment that we have here in the U.S. and in Europe. So I mean, their economy is just chugging along here, and this is a result of exports and demand from China. So the Aussie economy's been doing great. They just raised rates, I believe it was on Tuesday. So keep your eye on that. It's only down this morning because of risk aversion. So that's what's happening there. Let's see some other things. So we talked about the familiar themes with the euro. Let's talk about the pound real quick. They also had industrial production picked up as well. So that's a good sign for the pound. And they're talking about these elections going on, that now the Labour Party's closing in on the Conservative Party. So they're saying that there may not be a majority party in Parliament, which gives them a hung Parliament, which leads to nothing getting done. Well, here in the U.S., that's called political gridlock, and we actually like it, but apparently it's not favored over in the UK. So we're gonna have to see what happens with these elections to come out in May. But right now, so we've got some near-term things going on over in the Europe that are going to push it out to May. That's basically the elections in the UK, and then Greece coming out with its first debt payment. So we're going to see if they can make it past default in May, then things may turn around. In other news, real quick, let's just look at the dollar loonie. Dollar loonie is now, let's look at it here on a 30-minute chart. Dollar loonie now is back up above parity, as you can see. This is due primarily to risk aversion. The loonie's down, oil's down, but it still looks good. They're going to come out with their unemployment rates tomorrow, and it's expected that they're going to should have a gain. So we'll see what happens there. But here in the U.S., we can also look at this as a proxy for what's going on in the U.S. But the headline came out is, God, I got to read this because it's still so hard to believe. Initial jobless claims increase unexpectedly. Well, I don't know who this is unexpected to, but we had the non-farm payrolls report that showed, yes, we added some jobs last week, but a lot of this was due to the census hiring, as well as other seasonal trends. Now, we've got Congress that's out there that is, they're spending like drunken sailors. We have our president who can't seem to get off TV and talking about just about everything under the sun except job growth. Okay, and lastly, we've got these landmines trickling out of this healthcare bill, which is showing that it may be cost prohibitive for business as opposed to actually helping the cost. So, these are all ingredients in the recipe for fear out of business, and one of the reasons why they're not hiring. So if they're not hiring, that means people are not gaining jobs. That means they don't have money to spend. Just yesterday afternoon, the consumer credit numbers came out way down, much less than was expected. It just goes to show that a lot of people just spend money on credit, and they don't actually have the funds to pay for it. So now people have turned that around. They're saving more. They're not spending as much. But that's bad for retail sales, which in turn is bad for business, which in turn is bad for employment, and the cycle just continues. So we're gonna have to see how this bears out. But all this adds up to a risk aversion day. And one of the things that we like to say about the Forex market is that these trends are usually good for a couple of days. You can get good short-term trends out of this. When something happens like this Greek situation, it just doesn't turn around overnight. So you've got some short-term trends you can play there that they'll continue until something does happen. So, for example, if Trichet comes out today and says, no, we're going to bail out Greece and everything's fine, then you may see the euro start to gain. But if he doesn't, then you probably see the trend continue. So that's the nice thing about the Forex market. So, keep that in mind when you're thinking about different markets to invest in. And, if you're looking for an easier market to trade, this could be it for you. So, that's what we've got for today. Good trading for all.